Guys, let's do the update of some position that we're still holding and probably some of the positions that we look forward to get next week. Have a watermark here. This pair, which is the GBPCHF. We click on this one. We see that this pair is still, after hitting this particular supply that was here, price, we really missed the initial entry, but we tried to go in, which was a chess game, but we used the 4 hours time frame. We drop on the 4H, you can see this was the initial demand, supply, but price created a new supply here. So I had to look for a re-entry around this place, but my stop had to go all the way up on the original supply, which was around, it was around 67 pips up there. But at least now we dropped. But since then, the market has been in this place for a very, very long time. Dropped, hitting this daily demand. If we go back a little bit on a higher time frame, you'll notice that we had this barrier, this demand here. I tried to highlight this one last week, that we hit this area and we're expecting a reaction, but because of the higher time frame direction, the direction is very bearish. So we are very, very bearish. So this meant that, okay, we might get a reaction here, but we still want to see this area broken, then you can target this low. Then after you target that low, that's not the end of the road. Like we're targeting this original, I think it's a weekly time frame low, a strong low on the weekly time frame. This one, this way we're targeting at the end of the road. So here we are holding on this position first, just looking for to get rid of this low. All right, this low, but actually the proper low is this one. We get this one out. So if you go back to the daily time frame for trade management, you can say that break even. We could have added another trade here, but still, because of this barrier of this demand, it was not looking good. But on 4 hours, there was a very nice supply here for re-entries, only that I did not want to add in a position because previously I had not taken my position from the original supply. If I could have taken it from here, then I could have added a position here. So you can see we hit this supply and now we're going low. So we look forward for tomorrow, next week, price to go all the way down there, and eventually this entire coming week that we take out this demand and also close below that area. So that's the update that we have on GBPCHF. Now, on the next trade, and guys, you've been in this trade for the last, let me show you, for the last, since the day we got activated up to now, in the last 16 days, you can see 16 days, 16 working days, that's around 3 weeks, because every week has 5 trading days. So 5, 10, 15 with 1 day extra. So you've been there for 3 weeks in this position. So the next pair that we're in for a short is, let's go back a little bit higher. The next pair that we're in for a short position is this one. To me, light, I think it is this AUDCHF. This is the most hectic pair that I've ever come across in this in trading here. So you see this pair, if you look at it, actually this pair is just a bearish pair, very clean drop. You can see drop. So market just giving us those, short-term positions. So this was the strong supply, and now we're going lower. So you had a supply zone here. We talk of freshness of the zone, freshness of the level. Let's say this. I'll highlight this one. Move this one. We talk of this supply here. So price dropped, created a new supply and went lower. So in terms of freshness, we could say, in terms of an area that has never been mitigated, this was the nice supply that we had here. But if you talk of consumption of the zone, then market had this supply that was still It had been tapped just a little bit part of it, right? This was the supply that had been tapped a little part of this. So in the community, in our community, some guys, I noticed that they decided to avoid this one and they took their trades from this upper supply. But in my case, I did not really take it from there. I did take it from here. I did take this area from here. So this is how I marked my supply. Marked my supply right there. And we are in for short position. So we are looking forward to get what? To get a drop. A drop from here. Looking forward to go lower, to go to the downside. And if you look at this is a daily time frame actually chart. So we are just targeting this low, this area. We're targeting that area. So this is around how many pips from that area of entry to the lowest point. We're targeting around 200 and around 250 pips probably. So this is where I ended this trade. Let me see on a different broker. Let's see where we ended this position. I think I used to under, if I'm not wrong. Is it Oanda? No, not Oanda, actually. This guy. Okay. So you can see this where we took our position. So this was the most hectic pair. We took in and we've been in a drawdown. All right, in a drawdown, this means that the candle was running negative since date 28th of August. We've been there for the last, I think this 1, 2, 3, 4, 5, 6, 7. 7 good days. That is a week with 2 days on it. We've been there and we're just holding that running negative. So I like how Friday it closed. Still, it was not really looking good how it closed, but I'm looking forward that now when the market opens, we get to have a very good, very nice drop. At least we just need one huge candle like this one, right? One huge candle to the downside for Monday, and then we'll be comfortable to move out to break even. So here we're still holding this one there, and we're looking forward for shorts targeting down there. That will be just a good target because that's the low that we have on daily time frame. So that one is a pair that we're still holding our fingers closed because we have not really moved away from the entry, though it's looking better than than the other week when the price was up there. So that one is just a pair that is still there. Few members who are uncomfortable got out. Some people are still holding. And I shared this one both in my private community and also in the public community. So if you're in there, you can just drop your comment. If you got out also, you can drop your comment. Let's see how many people are still holding their fingers closed. Now, the other pair that we have here is the GBPAUD. GBPAUD, again, guys, we're still in this position. And this was just a simple pair that the analysis was very simple. If you look at it, it is not one of the best, of course, in my analysis. In fact, it's not one of the best at all. But I just took advantage of it because I noticed something. We look at it on daily time frame, we are very bullish. I'm actually not going to talk of the trend, but if you look at it, we get to see impulsive correction, impulsive correction, impulsive small correction, impulsive price return to a correction, and it has failed to go higher. If you look at this, it failed to go higher. So here we are taking just a short-term long, but possibly I like this demand that's a little bit down there. So if I take you to the weekly time frame, you might be able to get to see clearly how this area look like. You can see this where we have our demand, right? Our demand, you can see this is the weekly. Okay, it's well refined already. It's well refined already. I don't want to refine it anymore, but this the weekly demand that we have here. So we're looking forward. We were saying we wanted the market to go all the way, hit this area, and take a proper buy to the upside. But just before that, still on this one, on this pair, still here, we have this demand. We look at that, we have that demand, Friday base rally, which is on the weekly time frame. Price has been in this place for so many times. Came here once, twice, and the third time price comes here. So I don't like the third touch according to the weekly time frame, but at least we're looking for that if this third touch gets to push higher, right? Very nice. So I'm very a little bit aggressive on my position around this place. I did not move my stop at break even, but probably when the Monday, in the end of Monday, I'll move my stop to break even. But meanwhile, my best demand is down there. So right now we are just expecting that, okay, if this demand is still holding, then we're looking for the to get that push to the upside from there. But again, there's something that we can talk about on the weekly time frame here. Let me remove this. On the weekly time frame, sorry. On the weekly time frame, if we talk of how we closed on the weekly time frame, look at that candle. This one is a hammer candle, and the hammer candle, if you see it on a bigger time frame, it just means that the price is trying to reverse. All right, price is trying to reverse. Most of the time, these candles, when you see them on a bigger time frame, it's a big advantage. And when you look at it, I'll prepare a video for this if you guys want to for us to discuss a little bit about reversal patterns. We can talk about that. But on this model, this the way it closed, I just like how it closed. This gives me the ideology of trying to hold until next week. But again, looking on the other side here, we have a shooting star. I don't like this shooting star. It can be a very strong reversal pattern here. So I have to be very careful. That's why you see my target is just like 1 to 2 point around 7. So let's go back to the daily time frame and conclude how I did this analysis. So on the weekly time frame, after noticing that the weekly time frame, the market was very bullish, then we look back here. Price initially had this demand. This was initially the demand that was here, a fresh one. Price hits this demand, went higher, comes back for the second touch, goes higher, and return now you see it consumes everything and it pushes lower. So the demand that was left here, because the only thing that made me to keep looking into this area is I kept using the weekly time frame. I like the higher time frames because they give you a lot of a bigger picture. So you look at this when you use the weekly time frame, then the entire demand goes all the way to here, right? So this means that these are weekly demand, which I can refine it into the daily, refine it into the 4H as my last lower time frame. So on the 4H, you can see if you look at this, the weekly time frame, price used to this demand. But when you hit the daily time frame now, on this pair, we hit the 4 hours time frame, can look back in time, go back in time, and this means that the 4 hours time frame, we look at this, is what you get to see, impulsive, correction, then the impulsive. So this was a strong low, what we call the pivot point that was created here. And on this pivot point, we could look into it on the first time frame, and it was so clear that we had a very nice demand here. This demand is not even meeting all the rules, but at least it being the pivot point, then to me it was just enough to say, okay, I can still look at this area. So demand is there. Sorry, it has used the snap mode there. So that's where we have our demand on 4 hours time frame. This means that that's an extreme. All right, and this demand is still fresh. We look back here, this is the previous area. We talk of mitigation, right? That's the mitigation that happened there. So this was just a nice demand on 4 hours time frame. And looking at how the market had used this area, let's go to the right and look at that. Price falls back into demand, right? And the market started pushing higher. So according to the 4 hours time frame, you can say we're pushing higher from that demand, and we went higher and broke. For those who have done in the past SMC, if we bring in the idea of SMC, you can say after you hit this demand, you can say this could be a choke. I don't really mark this on my chart, but for educational purposes, let's do it. Change of character on 4 hours time frame, and we get again here there's no break of structure, so the valid break of structure happens somewhere there. If we talk of structure mapping, but I don't use it because it creates a lot of traps, and there's a reason for that. So the market breaks this structure, you can see market goes all the way up there, but it leaves a very nice demand here. Looking back on 4 hours time frame, this is the only place we have a high quality demand that leads to break of structure. So this demand was left here, and what we did was just to place our order here. Stop loss just below the demand. That's how I place my stop loss, looking at the momentum of the market. That's why you'll see my stop loss a little bit bigger, but I tend to look at the momentum because I don't want to have a 10 pips stop loss and I'm stopped out. I look at how the momentum of the market. If the momentum of the market is 40 pips, then I'm gonna go to 45 pips stop loss. So I placed it here, but eventually we need to target this place. But at least if I hit, we get to take out this opposing supply. Look at this one. Have a small barrier here in 4H. In 4H, there's a small barrier here, which is a supply zone. All right. If we get to go through this supply, then I'm gonna put my stop loss to break even. But right now I'm not yet at break even, so probably we can get a small reaction for day trading for the traders tomorrow like that, and maybe push back before we go through the level. So that's something that I'm monitoring. Once we take out this high, then I'll move my stop at break even. So otherwise, guys, that is what we have on GBPAUD. It's not like the best setup possible, but at least it is meeting some rules. Mostly the 4 hours is meeting at least 80% of my rules. Then I'm good and comfortable to take that setup from there. So that's another trade that we are holding. So far we have 3 trades running. AUDCHF is still running negative. So here, guys, hold on. I have one pair for you that you guys can look at tomorrow if you want to get a good setup. Now, the other pair that we had here was NZDCAD. NZDCAD is somewhere here. And on this pair, we look at it, just one of the best. We'll go a little bit higher on a higher time frame actually to get a clear picture. With this one, we look at NZDCAD. Honestly, previously, we look at the previous data of this pair. It's been really trying to go lower. So let's on this one go a little bit higher on what? On a monthly time frame. We try to look at this pair. Why am I looking for short position? Is because if we look at it where it's coming from previously. Let's do this. Please in our chart and get to see that the previous, we see previous direction it was dropping, but from here in the past, this pair has been doing this impulsive correction, but this correction went a little bit lower than impulsive, some correction. So it's been ranging a lot. It becomes very difficult to make a decision to see where strong areas are. And on this one, the only thing I could do is to look at the extreme areas. Where do you have demand? For example, here, this one, we had this particular demand here previously. Let's say previously this was the demand that it had. There hits that demand and went higher. So when it returns, you can see, and when it went to some sort of supply zones here, but when it comes back, it violated this demand, but still again started pushing higher. If it started pushing higher, where do we have a new demand? Because I'm more concerned when the pace more of ranging. I tend to focus where we have demand levels and supply levels mostly. So you look at this price pushing higher. On the other side of it, it left this. The talk of freshness. Then we have this particular supply here. Right. So he does supply and you start falling. So if you fall back, we have to fall back into a strong demand. But when you look at this area, we don't have actually a demand here. But maybe on a different lower time frame, we would have a demand, which means that if you're looking at that area, if you say that you're looking for freshness of the level, if you look at this is the demand which has been mitigated. But on this area, we have this. Look at this, the drop, this the U shape and price goes higher. This area can mark this low. Then when you mark the entire candle like that, it's already mitigated. So you can do what? You can go all the way and mark the base. The base has been consumed around, it's like 20% of the level. So still, I can say it's a higher time frame. We still have unfilled orders, and this still high quality demand. Right. So price hit this demand and started pushing where? Pushing to the upside until it happened to hit the supply there. But you can see now the supply has been removed. So if the supply has been removed, you can say this pair is completely now bullish. So you have to look at where do we have new demand on. So you can see when it started pushing higher after messing up the what we call the supply. We'll go to the current price. Sorry guys for this. I just want to go through very quick. Current price, where is it? We are here. Look at this low, there's no demand. Follow back, there's nothing. So you do this here. Fall back to our left. And this way we get our first high quality monthly demand. Yeah. Quality monthly demand. So from there, we can do this here. We can say market comes from this demand. And now this now we get to see the clear direction of this market, because the supply that was here has been destroyed. I think I've tried to do it to highlight like this, and you have seen price market already messed up that supply. So here we have this what we call impulsive correction, impulsive internal correction. Then we have an impulsive. So we are likely to get a correction back to this demand. Then we look for a stronger push to the upside. So right now we can say, what do we do? If this is our demand, right? If that is our demand, then we look for short-term sales until we hit this demand. And on the other side now, this means that when we look at the current price, have impulsive correction, impulsive, was that impulsive correction, impulsive correction, sweeping the previous high, impulsive correction, impulsive, small correction up there, which is internal structure. And we just, this is a picture that is coming along the way. This is what we're looking for, and we get to have a push to the upside. So from there, you can drop to the weekly time frame, look at the most recent direction of this structure. We look at it on the weekly time frame, because we know that this area we are dropping lower. So if we talk of the structures, this is the strong low that was taken out. Not actually, this is not the strong low. We can call it the weak low, right? There's a break that you get here. The same way you've been getting these breaks here, and go back. The same way you've been getting these types of breaks, something like that. Yeah. And market has been giving you those pivot points like lower low, high, low, high. This is a lower high, but has been swept. So you can see this now the clear lower high, and this is the lower low here. In terms of, if I take you back a little bit on SMC, guys, I'm sorry, I'm not really like composed, but if we go back to SMC, you say this cannot be the high. Why? Because that high has been taken out, has been swept. So of course it's not a high, but it has been liquidated there. Because it's liquidated like that. So it's been liquidated like that. You can say this is not the break of structure. All right. So the price goes all the way and breaks this structure and goes up. When it started pushing higher, we know that we are very bullish. So all the supply zones that are here, they are all going to be mitigated. So let's say in terms of freshness, so the supply, that's the entire high of that supply. Price has been to this supply 1, 2, 3, fourth time. Price hit this supply for the fourth time and started doing what? Going to the downside. So the price falling to the downside, this means that what we have here is that you're getting that swing from the supply, a drop, correction, drop, correction, and right now we're just in that drop. We're just going lower. And if you're going lower, where do we have an opposing area? We have to look back on our left and see from here, look back here. Let's highlight the first opposing area that you should be targeting on the weekly time frame. So if this supply here, this not supply, guys, apologize. The demand, if this demand is here, but it's been tapped by this candle. So what do you do? Have to go a little bit lower there. That's where we have our next demand before we hit the big time frame monthly demand that is here. This is our monthly demand. Before we hit this monthly demand, it has the bottom. This one is a topic for another day. But for now, let's work with what we have. So this is the one that you should target for now. according to the weekly time frame. So according to the weekly time frame, we can say we'll want to look for shorts from that supply all the way to down here. This is around 400 pips. 400 pips, 450 actually, 450 pips. That's according to the weekly time frame. And right now, if you look at this pullback just came from this candle here. It's not even a demand, it's just a decisive candle. Now from there on the weekly time frame, if we look at this on the weekly time frame, we will see that this market, when it dropped, all right, when it dropped from that supply, went higher and went low and broke this structure. So this is the low, the structure that was broken here, there. That's a the most recent structure that was broken on the weekly time frame, which is an internal structure, because these are the big, let's say, the bigger structures that were being broken. But this one is what we call an internal structure that has been broken. So we are moving to the downside. So you can say, if I do this, I want you to see the bigger picture. Impulsive correction. Then this, because it's been taken out, this is just like a strong low, correction, a strong low, correction back to the supply zone, and we're looking for what? For a drop. But this drop, we know market has to go like that. So till we hit this area, and since we are dropping, we expect the market to go lower and take out that area for reversal, and we hit our higher time frame demand. So here, you can say the market, the moment it went lower, just the minute it dropped and broke the structure, it retraced back all the way into this shooting star candle. That was the supply that had been created. Look at that. That is the supply that had been created. So this market has been this supply for, I don't know how many days. You can measure this from the date it went in up to the date it gets out, around there. It's been there for 119 days, a very long time. So price just moving from a very strong supply that price stayed in longer and we're dropping. So we're looking for to get a pump to go lower and take out this low and probably hit this weekly demand before we get a strong retracement again. So if I notice that I have my strong demand down there, then this one can be just a small barrier that price will react and still break it. So let's go to the daily time frame now. The daily time frame, we hit back on the daily time frame. You can see this weekly, what you call the weekly supply. You could refine it all the way because it's a body. You can go all the way at the top around that area, and you see price hits that area twice and now started pushing lower. So from here on the weekly time frame, we can start seeing, first we see an engulfing candle up there, a very strong reversal pattern, impulsive correction, impulsive correction. This is another structure because it never broke this low, so this is the strong low. Right, allow me to do this. This is the, because if we talk of the daily time frame, let me do this simple term. In simple terms, you say market from that area breaks the structure, that, and again we break this structure here, look at that, pause, and now this was just a small correction into this supply, and again we're looking forward for this to the downside. So when you start selling from that daily supply, also you have to look at the daily barrier, and this means that you go lower and you look back, you see there's something here. There's a demand that is here. This demand can give us a strong reaction, but it's more visible on 4H. So on 4H, we look for a short-term demand whereby we'll take a small buy before we continue with our sales. So the first demand is here. There, and have just to go all the way to the bottom, and that's our demand. So look at this current price. Sorry. Look at this current price. If we hit back on the daily time frame, we see that here this was the daily supply that was here drop. This is the best drop. So price hit this area, but some people asking me, where do we look for a re-entry? Because personally I trade higher time frames when I don't have clear lower time frames areas. So my lower time frame actually is the 4H because I do swing trading. So will hit to the 4 hours time frame, and when we hit the 4H time frame, we get to see that on the 4 hours time frame, inside the daily supply, the 4 hours time frame price has mitigated everything except this is the area that was left. This one, fresh, unmitigated. This area, right? Price hits that area and reacts. But if you go to the 3 hours time frame, there was a level that was also there. Look at that. The 3 hours supply, still fresh, looking like a shooting star candle. Let's see if it is less than 50%. It's not clear, but it's almost looking like a shooting star candle. But that's the supply that you have there inside the daily. So if you are not in and maybe market opens, you can monitor this market. And if it gets to do it, if it decides to push up and hit this supply, you can go in, put your stop above the previous structure and look for shorts to the downside. So for me, basically, this is where I am. Let's say this is where I am. Yeah, let's say here, where? Somewhere here, this on a different, you see this. I'm activated, I'm in, my stop is up, and I'm targeting this 4 hours. There's a zone here that I've tried to highlight on a different broker. 4 hours, 4 hours demand here. So this way I'm targeting, then I'll take a small long position from there, small buy from here before we continue with our sales. So let's look at the last pair that we're going to give it as a setup for you guys for this next week. We have a pair on Euro AUD. So Euro AUD pair has, if you look at it, you can say from the previous structure, you can see we are a very, very bullish, positive correction. Small, there's some internal correction here, but if we talk of the higher time frame, we can say this is the impulsive correction. Impulsive because we're now above the previous high, small correction, then the impulsive. So the market made a correction back to this demand and this what you call the internal structure, which is impulsive correction, impulsive correction, and impulsive. So let me zoom in a little bit, show you. So when the market made this correction, it came back all the way to this demand. The price hits this demand on the daily time frame, and now we are looking forward for what we call impulsive correction, impulsive correction, impulsive. So according to the daily, we have strong low here, which is the pivot point. If price hit this area, we are looking for continuation to the upside. Or else, if you decide to take out this low, then this is another pivot point that you can participate. So from here, on daily time frame, you can say this is the last break. All right, we want to call it the last break of structure. So this is your high, a low, then the high. So price should return to around this area. That's where you have a demand from this place, and you're looking forward to get some strong movement the upside. I don't like having this marked on my chart, but now it's mean that for a new setup. So you see, if you look at this demand here, we have a decisive candle here, commanded by an explosive, and market has been playing ranging games here. There's no demand and supply. Price took a lot of time here before pushing higher. So if you look at this one, click back to 4H, and if you look back on first time frame, in terms of freshness, get to see a drop, strong base down there. Price moves away and the market has gone up. Previously, this is the buy that we really we took the other time. Oh no, I think I missed this one. This was my demand previously. I think a couple of a month ago, this is my demand. Hit this demand and went up. So right now, in terms of freshness, and trade this area. So this is a demand that has been left there. My stop is down there because of like I was looking at the momentum, so I decided to put my stop loss just down there to stay safe and targeting this previous high here, which is 1 to 3 risk reward ratio. So Monday, if we hit this area, then boom, we go to the upside. So that's where in fact, I have a small pro forma account that account has been in it's been in a drawdown for a while. So on this one, I'm going to use this one just to clear that pro forma. I'm gonna go in with one lot. Sorry, this is not even a financial advice, but that account I've been with it for some time now. One lot position here, and I'm in for long. If it just turns around, I just need to get around to clear that. I think that challenge. I just need around. Let's see, something around 600, 800 USD. Then it will be cleared. So just one lot is enough. I don't know how much. Let me say. Let's see. Okay, here I can be risking a lot, of course. It's gonna be more than 2% of the account, but I just want to get rid of it, either it pass or we move forward because I have other accounts as well. So that's what I'm looking at. So guys, on Monday or Tuesday this week, this is where all of us we're gonna be. So otherwise, guys, if you like this type of content, just drop your comment. And also you're welcome to join our community, though the community is premium, of course, it's not free. But otherwise, if you enjoy the content, drop a like. I'll see you in the next video.